Hey, what's up, guys? My name's Charlie, and I want to help you build wealth in real estate. Real estate can be a phenomenal investment vehicle if you know what you're doing. The problem is it's really risky and can be extremely confusing. So I'm here to demystify real estate, and I'm here to help you build wealth. Hey guys, how's it going? Charlie here. Today we're going to look at what a HELOC is versus a home equity loan. They're very similar, but want to talk about the benefits and the negatives of both and how they're similar, how they're different. So the home equity loan and the home equity line of credit, they're basically a second loan or lien against your property. So you have the first lien, which is your mortgage, and you pay your bank every month for that. A home equity loan or home equity line of credit are both based on how much equity you have in your home. So for easy numbers, let's say your home is worth $300,000 and you owe $250,000 on that. You have $50,000 in equity. With that $50,000, you could say you want to do, maybe you want to take part of that $50,000 and go on a trip. Maybe you want to do an addition to the property, like adding a pool. Maybe you want to pay off a car or student loans. Maybe you just want that money to invest. Doesn't matter. A home equity loan is essentially a second mortgage on that property. So let's say you take out that $50,000. Now you have that $50,000 and you pay that off over a period of time, possibly 30 years. So now you have a loan of $50,000 and you pay principal and interest every month for 30 years, exactly like your primary mortgage, but they call it a home equity loan. So it's essentially a second mortgage on your property. A HELOC, on the other hand, is kind of like a credit card. It's a secured line of credit against your home and the home equity. So instead of taking out $50,000 with a home equity loan, you get $50,000 today and you pay that back over 30 years. With a home equity line of credit, it's like your line of credit is $50,000. You don't ever have to use that line of credit, similar to a credit card. You can use it, but you don't have to. With the HELOC, the home equity line of credit, with the HELOC, you could use that money today, pay it off next month, use it, and then reuse that money. Again, it's a line of credit, just like a credit card. So why would someone use a HELOC versus a home loan, an equity loan? Well, there's a lot of reasons for that. A HELOC will typically have a variable interest rate. So that means it can go up or down. The interest rate can go up or down. Whereas a home equity loan, it's a fixed rate. So maybe it's going to be 5%. It's going to be 5% over the course of the 30 years. Whereas a HELOC usually actually does have a higher interest rate, might be 5.25. That 5.25 could be that today, but if interest rates go up, that could go up. Maybe it's 5.5, maybe it's 6 or 7 or 8. But maybe interest rates go down and maybe it's 4 or 4.5. So with the HELOC, it is a variable rate. So just be careful with that. Some HELOCs are actually interest-only HELOCs. So you're only paying the interest every month. You don't have to pay the principal. And then some HELOCs, it's principal plus interest. There's benefits for both. We actually have an interest-only line of credit, which is nice because we can make minimum payments. We don't do that, but we have that option too if we want. So if you are interested in a HELOC, I would definitely recommend figuring out the interest rates, figuring out, is it principal and interest? Is it just interest? With a home equity loan, that's typically a fixed rate over 30 years. With the HELOC, it's different. There's a draw period where you can draw money from that HELOC. With a credit card, there's no draw period. In theory, you could have that credit card for years and years and years, no issues. With the HELOC, our draw period is 10 years. So we have 10 years to use that line of credit as much or as little as we want. And then if there's an outstanding balance after 10 years, then it becomes amortized. Then we have set payments over the next 10 years. So a HELOC is not as flexible in terms of the time period. You should have the option in 10 years of refinancing that HELOC and to kind of start that clock over. A lot of lenders will do that, not all of them. So just be careful with that. So why would someone want a HELOC versus a home equity loan, excuse me? The benefits that I see in a HELOC, even though it's a variable rate, it's a shorter payment period, it gives me a lot more control over it. So let's say I don't want to use my HELOC for 2 years. I don't have to. Whereas that money in a home equity loan, they give that to you day one. You're paying interest on that day one. Let's say with my HELOC, I don't want to use it for 5 years. I'm not paying any interest over that 5-year period because I haven't taken any money out. Another reason I personally like HELOCs is because I can reuse that and reuse that. So let's say I take out $20,000 today. Then over the next year, I pay that off. My line of credit is still at 50,000. So I can keep reusing that and reusing that and reusing that as much as I want to. With a home equity loan, you get that money up front. You're paying interest day one. When you pay that off every month, you're paying your mortgage payment every month. You don't get a bigger line of credit as you pay it down. So you have that money, you get it day one, and you don't get any more money from that. A home equity line of credit, a HELOC, gives you the ability to use it when you want to use it, and then also gives you the ability to reuse it, whereas the home equity loan does not. In either case, if you don't pay your payments with a home equity loan or a HELOC, you can lose your home. So it's very important that you make those payments and make them on time because you don't want to lose your home. Another thing with the HELOC versus a home equity loan, at least the lenders that I have spoken to personally, with a home equity loan, it is a second mortgage, so there's more fees with that. Whereas with the HELOC, there were very, very minimal fees. There was no fee, no origination points, no lender fees whatsoever. The only fee I had to pay is to get my home appraised. And if you went with the home equity loan or a HELOC, you'd have to get an appraisal anyway, depending on your area and how big your home is, anywhere from $400 to probably $600, maybe a little more. But for a HELOC, it was a one-time fee. I didn't have to pay any other fees with my lender. But if I took out a home equity loan, I would have had to pay probably a few $1,000s in fees. So that's just something also to consider. HELOCs have a lot of benefits. The negatives, potential negatives with HELOCs is the interest rate can go up. A potential benefit is the interest rate could actually go down too. So just be very careful with that. Make sure you can always pay your monthly payments. It's totally up to you if you want to use a HELOC, if you want to use a line of credit, if you want to use a HELOC or if you want to use a home equity loan. Just weigh the pros and cons of each. I like HELOCs. I think it gives me a lot more flexibility, even though the interest rate potentially could be a little bit higher. I'm not too worried about that because maybe I'm paying a few $100 more, maybe $1,000 more over the course of a year. To me, there's more benefits than negatives to use a HELOC than a home loan. Hope you like this video. Please don't forget to like, subscribe, leave a comment, and we'll catch you next time.